Welcome to another Beyond Bitcoin Hangout. Today is Friday, January 29th, 2016. We're joined again by Bytemaster from CNX, Chief Developer of BitShares, and the community that is the BitShares community, who join us every week to talk about updates, project updates, and to discuss the various things that are going on in the BitShares ecosystem. It's very difficult for any of us to keep a hold on everything that's going on. So this is an opportunity for Bytemaster to provide his updates. We usually provide about 10 to 15 minutes for that, and then we move into the community question and answer session. And from there, anybody who feels that there's an important topic can bring it up. They can respond to previous statements by Bytemaster regarding the updates and announcements. And they can also ask their questions. So please feel free to consider this an open forum. Please, as well, of course, understand that in these open forums, respecting one another is of utmost priority, because otherwise we cannot communicate. So feel free to type your message in the channel for the conference room in the bottom left-hand corner of the Mumble client, or you can openly ask it via mic. If you type it in, I will try to ask it for you. All I ask is let's try to understand that not all topics will always be able to be covered. We will try to fit them in where possible. Now, with that said, Bytemaster, I'm just going to do one more thing that I like to start every week here. Everybody in these hangouts is considered very passionate crypto enthusiasts. And for all of us who go around in our daily lives, we're very well aware that we are not the majority of individuals in this world, at least at present. And it's kind of hard to find people like us. So individuals who are working on projects like to share drop on the Beyond Bitcoin Hangouts attendees to sponsor the Hangouts and to thank you for making this possible and being a part of a community that is going to continue growing and bringing in new development. So thank you to all of you, and thank you to Ingenesis here, who has share dropped Quant on you guys from last week. And I'm going to go ahead and read real quick what he posted for you. The Ingenesis project, TIP, or TIP, would like to thank all of you for your participation in these Hangouts. Your thoughts, comments, and wisdom have been very helpful to us in our effort to build on the BitShares blockchain. Part of this research includes a novel cryptocurrency called Quant. Quant are mined by proof of productivity algorithm. It is sort of like a real-life proof of work. After all, we're solving difficult, non-trivial puzzles that are relatively simple to verify. While TIP holds a majority of Quant, allocating in the tranches, TIP as an organization will never sell Quant on an exchange. TIP exclusively share drops on people who help us build the infrastructure, the next economy, such as Curiosime, the WikiD tools algorithm, or the Wicked tools algorithm, and other critical applications. While anyone can buy Quant, only the holders of Quant, you, can sell Quant. It is your productivity to own. It is your value to build. If you would like to know more about Quant, the Ingenesis project, please visit the link below. In the meantime, please allow us to sponsor this Hangout with Quant, the new token that is the anti-dollar and meant to represent real productivity of the people by the people. One reality check and note that he provides here. Keep in mind that Quant is an experiment, and like all experiments, they can fail. So with that said, Bytemaster, would you like to get to your updates?
All right. Thank you, Fuzzy, for hosting this Hangout. This week, we've made more progress toward the stealth features. I talked with James and Valentine regarding the status of the wallet aspect of this, and it's They are producing stealth transfers using the API on the server, which means they're getting, sorry, my brain's not all there right now. They're making steady progress, and we're still on track for everything to be complete in mid-February. Part of the rollout for the stealth is also going to include server-side hosting of your encrypted wallet file. The idea here is stealth requires more frequent backups to prevent you from losing the information about where your balances are. So we want to make sure that the backup is ready to go at the same time as everything else. Now, the backup's a feature we're implementing for BitShares. We're not charging anyone for it. It wasn't a worker proposal. I think we did have a worker proposal for it, but we never actually requested funding. But we are still actively developing server-side hosting of wallets so that users can have some peace of mind. They can log into their wallet from any machine as long as they remember their username and password. Username and password do not go to the server, and the server does not have the ability to tie your wallet files to the account that the wallet's for. So there's lots of things going on that front. We had another blockchain Bitcoin moment where we stopped processing blocks for a little over an hour. But that's due to a new increase in cancel order fees. There's a part of the code path that when orders expire automatically, it creates a virtual operation, and it didn't pay a fee in the virtual operation, which meant that the block failed to process. We resolved that with a quick hard fork that fixed it. There was actually no fork of the blockchain during this downtime. No funds were at risk. No exchanges or anyone else ended up on a wrong fork. It was just a momentary disruption of service that was still less than the random block intervals that Bitcoin has. So we resolved that and rolled that out. If you haven't updated your full node or your seed node, please consider doing so. SVK asked a question about proposed transactions and the API for that. We are looking into getting that API out and updated so that proposed transactions can be enabled fully in the user interface. So we have noted that and are looking into it. I guess I'll go with any questions from this point.
Well, this has been a pretty interesting week. Seems like we're going to have a lot to talk about regarding this stuff and a lot of other stuff going on in the forums right now in the community. So, with that said, before we do this, does anybody have any questions regarding what Bytemaster just said, and then we can move on into the other stuff?
I do. Would the wallet being hosted on the server introduce any vulnerability to that server being taken down?
The wallet will be stored both locally and on the server, and it will synchronize with the server if the server's version is newer than the ones hosted locally. If the server does get taken down, then most users will be able to fall back to their current mode of operation. And then the next time the server comes up, you have access to the server. So it should be the best of both worlds. We'll have options in the wallet to disable local storage if you're on a computer that you don't trust, although you probably shouldn't be logging in with your wallet on a computer you don't trust, but people do it from time to time. So and you don't have to store it on the server. If you want to disable server storage, you'll have the option to do that as well, which would put us back where we are today. And this would also work with the Light wallet. So the Light wallet can be automatically backed up to the server or kept locally as it works today. All of this should give users flexibility. So those of us who are worried about backups can have some peace of mind. Those of us who are worried about a server getting hacked can choose to focus on our own backups. From our understanding, more people lose Bitcoin from forgotten passwords and crashed computers than they do from actual thefts. So I think this is a good feature that will improve the overall security of the system, as well as give users an experience even more like a centralized exchange.
Sounds like a good way to do it, a voluntarist way to do it. You've got the best of both worlds. I like it.
The other thing I've noted is that on CoinMarketCap, I'm looking at BitUSD. It looks like the premium is down significantly, and we are have dropped right around $1 again. So I don't know how accurate the CoinMarketCap projections are, but it looks like over the past couple months since we launched 2.0, the premium has fallen significantly. So that's a good improvement there.
Bytemaster, with regard to the turmoil that we had last night with the network downtime that you mentioned, I had a tremendous difficulty getting the nodes back up. I actually got them up several times, and then they would go down after a short period of time later. When I left last night 5 hours ago or 6 hours ago, I had 2 nodes running and all synchronized and working well, and when I woke up, they were both down. So I think it has to do with bad forks from the standpoint that you've got a lot of people that at the time weren't awake and their nodes were running the old code, and so they had the bad information cached in there. So when we came back up and tried to sync with them, I could get on a bad fork. That's the only way I can explain it, because I did nothing different when I finally got the nodes going again. So this is kind of a reminiscent of the old 1.0 days and how difficult it was at times when you got on a bad fork to get off it. Now, how can we resolve this, or is there just no resolution to it?
I don't know if you've properly diagnosed what was happening. We'd like to see reports on these issues. I haven't noticed any forks or people going off on forks during this period of time, but the way the code is set up now, you shouldn't be able to get stuck on a fork, because unless you have 2/3 majority of witnesses signed off on a block, it will keep the history and can undo and roll forward to handle any fork switches, which was the main problem we had before, was there wasn't enough undo history to see some forks.
I see. Well, let me just say this. I'm not an expert in getting into the nitty-gritty details of how the blockchain works, what you've implemented here, but I wasn't the only one having this type of problem. There were at least 3 other witnesses, if not more, that experienced the exact same type of problem that I had, and it took them hours to finally get up and going again. And when they did, they couldn't explain it. They just said, well, I just did it again and it worked this time. So there's something going on that needs some investigation. I'd be more than willing to help, but I'm not sure how much help I can be as far as my level of expertise in the details.
There is an issue, and I have seen I think we have a fix that just hasn't been incorporated that could be deterministic behavior, which is what we're experiencing here. I'll verify with Ben after this conference and see if his fixes have actually made it into the BitShares branch. If not, we will probably put out a new release with those fixes and clean up a little bit of the emergency fix that we put in last night.
Thank you, Bytemaster.
Where do we stand in it? Data security note here is saying we have had an increase in DEX orders in the last few days due to some new bots. It means we have more orders and requires more memory. I think the issues we are facing were related to this since you were running on minimal RAM, 1 gigabyte.
That's not completely the case. I mean, I know he said that last night, but one of my nodes is a 2 gigabyte node, and it had the same problem. So, and I was looking at memory. I've been looking at memory the whole time and anticipating that it's going to have to be increased at some point. So it's not fair to say that that's the issue. That may exasperate some of these problems, but that's not what got us into the mess last night. I can guarantee that.
Well, we'll look into it. I know there's several issues that I want to see fixed in case anything like this happens again. But it seems like once we do get it all up and running, it seems to be stable. If it becomes unstable after we've gotten all the witnesses back up, we're at 92% participation last I saw. Let me know and let's file a bug. Nothing we changed recently should have introduced this type of instability, but we will look into it. We have noticed that account asshole1 has been attempting to abuse the low fees for creating and canceling orders. The bigger issue we have with this is the operation history, which is kept in memory on the nodes. We'll probably need to look into ways of sharding that so some nodes don't have to keep that history around. Just activity like that creates a permanent memory increase. It's not necessary for validation, but because most nodes are running with full transaction history enabled, it can cause some problems for low memory nodes. So I would encourage anyone who's running a witness to go to their config file and disable the accounts. I think Xerox can probably figure out how to do it. I don't remember off the top of my head, but I believe we have the option to configure which accounts we save transaction history for. And if you disable that, you'll free some memory and make your witness node a little bit more resilient to flooding attacks.
Xerox is asking, isn't that disabled by default?
It might be. So
I'll be keeping my eye open for that. That's a good tip if it will help.
So just so everybody's aware of this, Asshole 1 has been, can we go a little bit deeper into what Asshole 1 has been doing specifically?
he's just creating and canceling orders.
And the creation and canceling of orders is causing a lot of extra stress on the network is essentially what's going on.
It's no, it's not extra stress. It's just the fee he's paying to do that is relatively low, and so he's just doing it to do it because the network's allowing him to do it. It's not really a problem until the committee members raised the fee for canceling orders to non-zero, and then asshole one created a order that expired, and when it expired, it wasn't paying any fee, and so it failed. That's what hung the blockchain. But it also revealed the vulnerability that expiring orders that don't get filled need to pay a fee. Otherwise, you could flood the network by creating orders that expire immediately and pay no fees. So that's definitely.
So we can thank asshole.
Yes, I definitely consider this a good thing. He's proving, he's educating everyone as to what the fees need to be, showing potential vulnerabilities. It means someone's out there probing, investing their time in BitShares. So whoever this person is, I am thankful for them rather than upset that they broke our toy.
Do you think he might have a different motivation than that for what he's doing?
Whatever his motivation, it's still useful, and we still all benefited. The DEX is more secure now and more robust now as a result of his efforts, which means every time we get one of these things behind us, we learn, and we've proven the system in more cases. So it's definitely a good thing.
True. I have to admit though, like, you can't deny that this is a little bit ironic. Definitely sees a little bit of humor there.
Yeah. So I've been putting a lot of thought into fees and how to prevent abuse and to dynamically set fees without the witnesses and committee members having to react like this. Data security note has been telling me how much time is spent discussing what the fee should be and managing the proposals. It's just a lot of manual effort that these people are putting in, and I think we need to really thank all of the committee members and give them a lot of credit. Don't give them grief. They're doing a difficult job of trying to figure out how to tweak the levers of BitShares to maximize its value to the participants. But it's identified a real weakness in the BitShares system of manual intervention required to tweak the fees in order to respond to supply and demand changes. Ideally, there's a lot of transactions shouldn't need fees as long as we're below capacity. And fees should mostly be used for anti-spam. But of course, we've got the referral program and things like that. So we need to make fees somewhere. But if we had a way of preventing spam, we can make all of our fees from market orders rather than from fees on the transactions themselves. So I've been looking into that. I think I've got some solutions. I've also been looking into solutions for liquidity and improving the tightness of the peg, but don't have anything I can share on all that yet.
What are your thoughts, speaking of which, about the committees talking about potentially using the fee pool to help subsidize?
I think the committee can use the funds they have control over in whatever way they decide is best. I don't know how far that will actually go in the grand scheme of things, and it's a lot of manual work in order to use it in that way, but it's something.
Yeah, it's just kind of interesting to see what people's opinions are. Does anybody else have any opinions regarding it? Since we're on committee discussion.
If it'll improve liquidity, it may be worth considering.
It'd be short term. That's the problem.
Gotcha.
Why is it short term only? Just because the pool is small?
The pool's relatively large now because of a year and a half of accumulation. But if you spend it, enough to make a difference, it'd run out in a week or two, and then it won't regenerate as fast.
Well, then if that's the case, then it probably doesn't make sense to use it for the purpose of increasing liquidity. Then if it's going to be that short term, because that's a flash in the pan, that's really not very much of an impact at all.
So
So
I'm
did
interested in
BM
getting
cut
some
out to all you guys?
feedback. I'm interested in feedback from the community of what things can we learn from BitShares, what things can we learn from others, just so that we understand, what options are we, what mistakes have we made this far, and if we had it to do over again, what would we do? Understanding that is educational for all of us. Obviously, all these cryptocurrencies are experiments, including BitShares. I'm curious to get some feedback on what things are we doing right, what things could we do better. Especially.
One thing I'll offer Bytemaster feedback-wise is regard to witness pay. I think you're doing the right thing there, and that is something that we've done ahead of many of the other, like Dash, for example. I was listening to Daily Decrypt yesterday, and they were talking about how they set themselves apart from Bitcoin by offering individual nodes incentives for operating a node, and we're way ahead of that game in your process of doing that. So I think you're on the right track with that perspective.
It's a difficult question. What have we done wrong?
So data suggested that the committee should be more of a Senate than a Congress, giving each member equal weight regardless of their vote. That would be a trivial change to make, and I think has some merit.
Well, in that case, then essentially, who would be the people?
The shareholders would be.
But I mean, we could vote in and out committee members. Well, I guess it's slightly different in our ecosystem because you can vote somebody out at the drop of a hat.
It basically says the committee member with the least votes has as much weight as the committee member with the most votes, which is good and bad. It gives the minority a little bit larger voice, which can be good and bad depending upon the type of attack you're looking at.
And this is, I'm assuming, I hate to interrupt, Bytemaster, but this is regarding something that is on the forums being talked about quite a bit, actually. You guys hear me?
When you look at that model, I mean, what you're talking about, I think the Senate is a pretty good analogy. And if you look at that model, it's very similar to what we have in the United States government. So we need to use that as a predictor of what will happen in our ecosystem if we adopt those characteristics. I'm not saying they're bad or good. I'm just saying we have a model already that we can kind of look at and see what and distill what we can from that model in terms of how it will affect our ecosystem. And our ecosystem is different, but still it's worth looking at.
And this is also just so to give some people some context if they're not forum readers. This is probably being brought up because of BitCrab. Am I correct on that data?
So the issue is if one committee member has twice the vote of another committee member, you could get a 51% attack where it's theoretically possible for a single committee member to have 51% if they've got enough stake behind them. And that would give them complete control without any accountability. And the goal was to have a minimum number of committee members. So it's sort of like how all the witnesses have equal turn to produce a block regardless of their vote. Witnesses that have twice as many votes don't get to produce twice as much as other witnesses. So it would force the attacker to create 11 fake accounts and then vote them all in with approval voting in order to get 51%. So in theory, because we have approval voting, if someone's able to get that much concentration, they could get it for 5 accounts or 1 account. So maybe it doesn't make any difference at all.
Yeah, well, I can see that it would probably be a little bit harder for them to do it the second way, but you're right. That's kind of what I was thinking. Seems like the stake-weighted voting for getting committee members in would just be another way of them essentially doing the same thing.
In fact, it might actually be worse. So, overall, a lot of people are complaining about what BitCrab's trying to do. I'd like to hear more about those complaints. I haven't followed all the politics that have been going on. I've been too busy trying to get actual work done. But my understanding from what little I have seen is that he wants to lower all fees and end the referral program. I think that's a legitimate.
When the committee confronts these issues, it's kind of important in my mind to bring it to the community's attention what's going on behind the scenes too.
I think it's a legitimate thing to consider, and I don't think that we should try to villainize someone who is actively pouring time and energy into BitShares to make it better. He's just as likely to be right as those who like high fees in the referral program. Which way is the right way to go? I don't know. I've looked at it 2 different ways. We created the referral program with the concept that fees wouldn't be an issue, and because they're so small compared to the alternatives. But there is this very real psychological effect that fees create. It limits use cases that could spur network effect. And at the end of the day, we might be penny wise and pound foolish. We're trying to collect every little penny from fees, but sacrificing the network effect. And the network effect can cause, we'd make more money by having the market cap grow because we have 1,000 new users than we would by trying to collect pennies from the users we get. I get that argument. So it comes down to a debate among the different parties that are interested in building on BitShares, those who are depending upon the referral program as a way of generating revenue, and those who don't care about the referral program for their particular business model. And it's kind of hard to simultaneously meet the needs of both groups of users.
Perhaps the referral program might work once we got a bigger market cap and the liquidity and the marketplace was bigger. Maybe we just have come out with the program too early, and it would be very successful down the road.
It is one of those things that does take a little jump start to get rolling. You have to have people using the system for people to want to join and use the system. So my opinion is that the short-term cost to anyone who's depending on the referral program in the short term is not going to make that much money from the referral program, regardless of what fees we set. So the difference in their income from lowering the fees in the short term will probably be relatively insignificant compared to any extra, giving people the free out without getting charged a lot. And I think experimentation and making people feel comfortable trying it will do more to grow adoption than putting too much friction on people trying out the system. So I can definitely see the case. I'm not going to say which way I think the committee should decide to go. I'm just going to suggest that everyone be civil and recognize that different opinions are good, that ideas and diversity of ideas and the debate itself is what makes us stronger. Without the debate, we would not have the opportunity to learn or grow and be stronger.
Bingo.
So
I would just like to say that I think we're not going to have a network effect until we have the web wallet that people can don't need to do their backups for. So what is the progress on that?
it's mostly done. There's just a little bit of, we've implemented it as a library and it's all working. We just need to backport or migrate the existing BitShares wallet to utilize the service we put together. And the goal is to roll that out at the same time as Stealth.
Awesome.
Joey D brought up a point here regarding this topic. Would a solution be possible by combining a lot of microtransactions and sacrifice confirmation speed to lower cost and fees? So this kind of sounds like a hybrid version of kind of like in Bitcoin, where you can set the fee that you want to pay and then be kind of put back in line on the priority list, or you can put yourself at the front by doing something else.
Personally, I prefer solutions that don't charge users any visible fee. I think that once fees get down to a certain point, the mental cost of the fee is greater than the economic cost of the fee. I think we're already pretty close to that point, and that the real solution is rate limiting users to prevent spam with no real fee. The actual fee is hidden in the time they hold coins on the network. Larger stakeholders can transact more often than smaller stakeholders, but the average user can transact all they want without experiencing any fees. That type of thing, it'd be better to go to that solution than just lowering the fees down to some fractional cent. But those are the types of things that we need to consider in the short term.
Is there any way to support the referral program with very low fees? And I guess the second part of the question would be, if the fees were lowered significantly right now, would it be an advisable thing to do at some time in the future to actually raise all the fees in order to begin to support the referral program?
Well, once you have network effect, fees can rise and people won't easily leave because they're too locked into the economic ties they have with everyone else. So it's like Bitcoin raising fees because they've hit their capacity limit. People pay the fees. I think we can definitely raise fees once people are sort of committed to the project because of network effect. And until we've achieved network effect, fees are just delaying that and possibly preventing it from happening. But we certainly need to look at taking care of people who are actively building businesses. I would suggest that anyone who's building a business who would have earned income from transaction fees could get paid via a worker proposal to make up for the fees the network lost. That would probably be a net win for the network, even though it's creating some BTS to make sure that those businesses same income they would have gotten if we didn't lower the fees. That would probably still be better overall. It might be a decent compromise. So if you take the BitCash and the stuff they're trying to do, we can look exactly how many transactions they would have gotten, and we can reimburse them temporarily as sort of a making the referral program work with inflation rather than charging fees. And we can do that on a case-by-case basis for individual businesses that are known. We know who they are. We can audit and view the actual stuff they're doing. We know they're not abusing the system. So we can do that on a case-by-case basis now. And then in the future, we can raise fees and remove the subsidy and then let everyone actually compete without having to ask approval.
Why doesn't percentage-based fees with a lower and upper cap not solve almost all the problems? I think it does.
It solves it for transfers, but there are a lot of other fees in the system. Voting, account update, order creation, cancel, and the like.
Along those lines here, we've got a couple questions that are in the forums around this topic, and Data Security Node had something that's kind of in this topic area as well. You mind if I cover those real quick? Okay, I'm going to do it anyway. Shentis asks here, I would like to know if Bytemaster's had time to look at the proposal to create the contract for difference or collateralized trading market under BSIP's issues 6 on GitHub. So that is https://github.com/BitShares/BitSips BSIPs/issues/6.
I don't think anyone's going to be able to follow all that, Fuzzy. But
yeah, I'm going to probably edit that out.
To answer your question, I haven't looked. I know that it exists, but I haven't studied it in detail. I have been looking into ways to achieve better pegs, ways to get yield back, ways to get all the things that we want for BitShares. I've been looking into those type of things. But obviously there's a lot of ideas, a lot of strategies. People on the forums have come up with good ideas. Bond markets are something that I've made a little bit of progress on how those might be designed. So what I'm trying to do is sift through all the different options, flesh them out to a level that I can actually describe and we can discuss in greater detail. But I think it's enough to say that there's lots of options for how we can really bootstrap BitShares. One of the things I'm very excited about is a project I know about that could give BitShares some exclusive assets to trade on its exchange, and that could drive a lot of traders to BitShares for trading simply because the assets aren't listed anywhere else if the project's successful. I really like those types of things because that's how a lot of cryptocurrency exchanges got their big boost. Is there's some hot new project like Ethereum, and you can only trade it on one exchange, so everyone goes to that exchange to trade it, and then they end up staying around because you achieve network effect. So when projects like that come to my attention, I try to get a BitShares exclusive for the exchange on those assets. So
you're saying that this would be on the DEX?
yes, any new cryptocurrency project, anyone can create an asset and provide a gateway like Block Trades or Open Ledger and get their asset trading on the DEX against CCEDKs or Open Ledger's USD. And if you have a big enough, exciting enough project like Ethereum that has an exclusive on BitShares, then the effect will be to add a lot of liquidity to multiple BitShares markets.
And this is, are you talking about the gateway tokens or are you talking about market pegged assets?
Gateway tokens. But market pegged assets are something I think they depend on a supply of people willing to go leverage long on BitShares, and that's a limited supply. So I think in order to get the most bang for a buck, we need to focus on bootstrapping USD and CNY rather than create more of those at the point in time. But I'm talking more like gateway assets that would get people into the exchange to experience the exchange. And I think once a lot of people experience how easy it is to trade, they'll learn about BitShares and they'll probably stay around and might buy some BitShares. So I think projects that can get listed on the BitShares exchange will be a great way to introduce it to more people.
Definitely. I can be certain to tell everybody that whenever you send somebody a token and you tell them they can actually go to the exchange and sell it and see it happen in 3 seconds, people get interested in it and talk to you about it. So that I can kind of vouch for that. There's one more topic here regarding this on the forums before I move to Data's topic here. Bitcoin fan asked, what are your views on LMSR market makers? Is CNX thinking about including this in the future? What is LMSR?
It's an algorithm for automatically doing market making where you basically have infinite liquidity. The price moves proportional to how much the market maker is pre-funded. The more that it's pre-funded, the less the price moves as a result of each user's trade. The creator of the LSMR market, worst case, loses their initial investment. I think there's a lot of potential for those type of markets, particularly when liquidity is a big factor. I am interested in seeing such a thing on BitShares. That's a good candidate for a fee-backed asset or some project like that. A lot of these ideas depend on some entrepreneur having a plan for it. The actual implementation of something like that is the smallest, cheapest part of the overall puzzle. For $100,000, you could completely build and deploy a prediction market site with LSMR in it, but you need $1 million to get all the marketing and user acquisition and everything into it. It's those numbers are just order of magnitude. I'm just saying that it's 10x harder and more costly to get all the infrastructure in place to actually acquire users and market and present it than it is to get the actual functionality on the blockchain.
Got it. Data security node here, and I'm sorry guys for going through these so quickly.
I can read his thing because I wanted to make a statement on it. He said that other proof of stake coins are paying interest on people who hold deposits on the chain for a long period of time. That is an advantage that they have, and it does create demand. It offsets the downward pressure or risk of the price falling for holding for a long period of time because you get more tokens. So as a result, more people hold, there's less selling. Overall, paying interest to people to hold deposits is a way of getting a vested stake in it. It's sort of like the blog post I made about the benefits of proof of work, where I said locking up funds for a period of time and paying interest on it is a form of proof of work, and it does provide value and stability to the network, even if there is dilution involved. The people are giving up their liquidity today. They're making a longer term commitment to the project, they're less likely to be apathetic voters because the only way that they can impact their vesting stake is to vote, to make the vote in such a way that it causes the price to rise rather than fall, versus just selling when they don't like which way the network's going. So there's all kinds of benefits that other proof-of-stake coins have with respect to that. I'd say that perhaps one of the biggest challenges in BitShares is understanding the pros and cons of when is dilution good, when is it bad, is it always bad, how does it affect the price, and we have a lot of mixed ideas on that. So a lot of people have expressed concern that I'm milking BitShares for continued work. And I definitely don't want that to be the perception. I don't think that would be good for BitShares. And so I've worked very hard to avoid using dilution to fund work any way possible. So I just want to throw that out there. But if in the interest of academic understanding, of comparing pros and cons, looking at the opportunity costs, I think it's a really good discussion to have on what are the benefits and what are the costs of different inflation models. Obviously, Bitcoin's inflating much, much more than BitShares, and it's having it's not slowing Bitcoin down. At least it didn't. Inflation alone is not preventing a system from rising in value. So there's lots of factors to consider there, and I think we could learn a lot from other projects. Some people pointed out that they left BitShares because I badmouthed other projects. I think, if anything, there's a lot to appreciate about other projects. Everyone is doing something right. Everyone's trying to solve some perceived problem with some mixture of good and bad characteristics. And we can all learn from each other. If we think that we've got the perfect solution, we're probably doing something wrong. And it's good to have an honest look at ourselves, at BitShares, and see where it's failing in the market. So I think that's a good point, Data.
There are very good topics that Data's brought up here. Another one is, he says here, apathy voting hasn't been completely solved. Proxy is good, but I think votes that expire over time would keep everything fresh. That's kind of what happens in our current system, which kind of dovetails from what Tom was talking about earlier with looking at our current system, at least in the US, as a model.
I agree that votes that expire over time would be superior to what we have now. We talked about this 6 months ago almost. Put it on a to-do item to implement it, and never actually implemented it. But yes, that is a lesson learned that we should consider.
Data, do you have any other things that you'd like to post here? Got a lot of them to cover.
I would like to ask somebody to step forward and at both sessions to summarize what went on in the forums for the week in a non-biased way. Some of us don't have time to keep up with the forums and have other projects and other things going on. So, wonderful service if somebody could just summarize what happened in the forums during the previous week.
Brindle, what I'll tell you right now is we have an opportunity to kind of show you the questions and answers section here.
Kind of the daily decrypt on a
every-
weekly basis, right? Is what you're looking for, Brell Swan, or the forum?
That would be awesome.
There's an opportunity.
But there's certainly blogs out there that capture the highlights that are a little bit more easy to follow than the forums as a whole. So I really appreciate all you bloggers out there who identify key threads in the forum and turn them into blog posts. It would probably be good to have one of those bloggers have a week in review highlight. Then we can just have one place where you can go for that information.
Well, if there are any bloggers who are interested in doing something like this, please feel free to step up. I'll also ask, however, that all of the individuals here who are interested in having something like that consider donating to somebody who's going to produce something like that, at least early on.
I also have an idea I'd like to out to the community, and that is to have a user issue asset that is backed by a referral income. So, for example, I created, and I'm not sure why I did it, but now I like that I did it. I created only 100 giggles, and now I'm thinking of making the giggles tied to the Smitoshi account, which is a lifetime refer, and each giggle would be a percentage of the lifetime referral income from that account. So I want to know what people think of that, and there you go. Feel free to use that idea before me.
It's a good idea. It's kind of like what Obits is doing. We can, with the infrastructure we're putting together with Stealth, it should be relatively easy to direct any fee stream to purchase back an asset. So with a relatively small addition on top of what we're already doing for Stealth, we could redirect referral income to a buyback account for an asset. I think that would be a very interesting use case.
Out of curiosity, Brendel, do you have any planned use case for this? Like how you would actually distribute them, what they would be distributed for? Or is that something you can't talk about?
Well, once people can use BitShares like any other system where they don't need to do the backup, then this kind of adds a level onto the referral stream. And also we'll be able to doing our own multi-levels of user issue assets on top of the referral income. So I just see that the worries about network effect should just be put off until we even have a chance to have a network effect on regular users who are getting into it for a business opportunity. They're not getting into it for trading or anything like that, and they're not necessarily worried about making their income from people using it. They're going to make their income from people signing up for lifetime memberships.
Thank you very much. That makes sense.
So we have a situation where there are so many ideas that could be flushed out that I could spend full time writing white paper after white paper on different ideas and the economics thereof and how they would implement them. Things like this, things like an alternative to a buyback system where all the fees are put into a pool, and then the shares are used to claim a percentage of that pool. So they'd have you'd have some equities instead of just all just pure earnings. It'd represent an actual stake, a percentage of all earnings. And if you cash out, you can get your percent of all past and future earnings. There's things like that. But there's just so many good ideas so many things that could be fleshed out and documented. It really is a full-time job just trying to put these designs together, let alone figure out how to build a business, implement and fund, and a user interface around these things. So I would say that the opportunities in the crypto space are huge. One thing I find particularly interesting is a version of Ethereum without gas fees, and with the performance of BitShares. There's lots of things to consider.
Well, we are currently sitting at about an hour here. Do you mind if I just bring up one more of Data's lessons and then a question by SVK?
Sure.
All right. I know that we try to stick to the 60-minute timeline here, so another lesson learned. And maybe, Data, you can come up with one of these every week.
I think there should be a forum thread, and someone should
That's brilliant.
document them all as concisely as possible, the pros and cons of different things we've learned. And I'd really like to see someone do a study of all the different systems for pegging to the dollar that are out there. Pros and cons, why we like it, why we don't, what they're succeeding at, if we can get all those things, it'll really help us stay in tune with the rest of the market. We can be so focused on BitShares that we might miss cool innovations in other coins out there. So definitely such a resource would be valuable to the community and help us have better strategic planning. So
sounds like a good idea, and we've been talking a lot about analysis behind the scenes, so that's probably a good idea to start with. Real quick here, Data goes into it. He says, I also think the user experience should not mirror the back-end mechanics of the blockchain. It should focus on how users like to use things in ways they understand, instead of giving them the BitShares way that they have to get re-educated on how to use. Doing it over again like you asked, I would have put more focus on this for most users and allow CLI to be left for the tech devs.
Now, keep in mind with a system like BitShares, our user interface is putting together the thing that we can build the fastest to expose all the features as a reference, so that it's not meant to be. Someone like Bitcash is doing exactly that. They're focusing on just what users want to do, and I love the Bitcash user experience they put together. It usually means stripping out a lot of things, but for the reference wallet, just to be able to see all the features actually used, we're doing things the fastest way that we know how, and still trying to make them useful. The other thing is, it's not necessarily obvious what is the BitShares way versus the normal way of doing things. And I would not define normal as what other cryptocurrencies do. So identifying what is normal would be, or what is expected, what users would intuitively understand. That's a real art form, and I wholeheartedly agree. Easier said than done, though. And keep in mind, every person on this call who, if you ask them what flow they are, they give completely different flows. So it's obviously a situation where there's no one answer. But I agree that more work could be done there. It's a huge opportunity, and we are aware of the need to do that. So that's part of the reason for doing server-side wallet hosting is people expect to be able to log in from anywhere, and we're currently violating that. So we are trying to put the pieces in place to get the user experience closer and closer to any other exchange. And that's why one of the things I'd like to see is eliminating fees for things like account updates. That's a workflow that is the BitShares way, and we need to do it to prevent spam, but it just puts people off. So those are the type of things where back-end design decisions ripple through to the UI, and the solution is not at the UI layer. The solution is to come up with an alternative to charging a fee at the back-end layer.
Would there be a way to make it so these functionalities or certain ones that could be spammed and used against the network would be only open to lifetime members?
Those are the types of things that people have to consider. But obviously, account update can't be only open to lifetime members. So, and obviously, someone who wants to attack the network can upgrade to a lifetime member and then attack the network. So you need something that's that solves the problem of spam and solves the problem of allowing the users to do what they want to do in the user interface without the backend forcing the interface into any particular direction. For example, Bitcoin forces the user interface into exposing public keys. And there's just a lot of knowledge people need to have in order to use Bitcoin directly. That's an example of backend pushing complexity forward. And it takes a lot of work to hide backend complexity in the user interface. If you can simplify the backend, it's a lot easier to make the user interface simpler. So, anyway, there's...
Oh, sorry, go ahead.
So I'm sure so Little J asked if we know how much blockchain made. I'm sure someone can probably run a report to say how much income we're getting from various fee sources and publish it. I think CryptoFresh is an ideal candidate for generating charts on that.
Yeah, and Xerox said the other day, I think after he looked it up, it was something like 13,000 an hour or something like that.
Yeah. So the lessons learned is that the user UI UX needs to be designed from the beginning, and that Cryptonomex can't just focus on the back end. I'd say our focus on the back end is primarily one due to resources. If I had the resources available, we'd have a lot more front-end developers. But that's just the way things are. It's easier to implement the back end by orders of magnitude. So obviously, that's good lessons learned.
Well, thank you everybody for attending today. Before I let everyone go, SVK has one question that he would like to ask, and then I would like to open it up for Jacob if he would like to talk a little bit about his worker proposal while he's here. SVK says the proposed transaction feature is ready to go in the UI, the GUI, but there's a bug in the witness node preventing me from releasing it.
I already addressed that. We're looking into that right now.
Okay, just making sure. You addressed it very early on, right?
Yes.
Okay. From there then, Jacob. Okay, I'll go ahead and I'll let everybody know then. Jacob has a post on BitShares Talk. The topic is called Worker Proposal Percentage-Based Transaction Fees. So if you search that, you should find it. A breakdown is that they have a total budget of 4.4 million BTS with the following split, and it tells you all of that on this page here. And their proposal includes the whole package, they say here: the code review by CNX, unit testing and testnet testing by Abit and Jacob, hopefully with the help from Xerox, full documentation and guidelines for similar projects by Jacob, GUI support by SVK. And those are the individuals who would be being paid for this worker proposal. So if anybody is interested in it, please look it up on the forums and look into voting for it if you are happy with what they're doing.
I am very, very pleased with the proposal and the people involved with taking the initiative of getting all this stuff done. Good work, everyone. It's grassroots, non-centralized efforts like this that really excite me.
Yeah, it is pretty awesome.
Yeah, I'd say funding it just to reward people for that is worth it. So definitely vote for it. It's a good lesson for others. And if you want more of this type of initiative, and they've already done a lot of the work in advance of even having the worker proposal done. So please vote to support this worker. I'm going to update my proxy to vote to support it. It's a great inspiration for me and others. So keep it up.
Well, Ken has a question he would like to bring up regarding witness server setup. I don't know, is this a problem or a question that needs to be directed directly at Bytemaster or no?
Yeah, this is graphene related as far as I know, but it regards about how the witnesses are set up. Is it okay to change topic real quick? It's just a real quick one.
Ask away.
The amount of data that's being sent to the mobile clients is enormous. And I've had some reports that, like for example, if you leave your mobile wallet open for 25 minutes, that you've got about 400 megabytes that have been sent. So it's completely eating up my data plan, our data plans. So is there some sort of something that we can possibly upgrade the witnesses so that it only sends what's absolutely needed to a mobile client, and maybe change even the timing or just, I don't know, because I heard there's big blobs or something that are being sent, and that's just killing our data plans.
Sure. We put in a hack to make things reliable in the wallet, where we just send it every change. So part of this bandwidth usage you're looking at is caused by the spamming that's been going on. But also any account that gets referenced in the wallet and fetched, any changes to that account get sent. So we already have some code that tries to do a Bloom filter on the change set that actually gets sent to the wallet to only include the objects that actually do change, that are relevant, that that node has requested, instead of all changes on the blockchain. I'm kind of curious about why the bandwidth is so high, so we'll look into it. That is something that we've known that we needed to go back and improve upon. This is one of the these are the types of tasks that I think justify a worker proposal for block trades and Synapticad folks to just to maintain and fix. There's a lot of these things that we just need to constant man hours in. The benefits are shared by everyone. They're not something that we funded by a fee-backed asset. They're not sexy new features. They're just making the stuff we have work more reliably. So,
is this problem that Ken is raising with the wallets. I thought we had a model with the user interface such that it was a calling interface, so that you would only get data that the wallet, that the UI wanted. You subscribe to the things you were interested in. So I'm not sure where this push of raw data is coming from.
Yes, we have a subscribe model, and the wallet's implemented using it. The server is oversubscribing the data, is sending you everything, just to make sure that any bugs are covered, right? What we didn't want to have happen was the wallet subscribes to data and then doesn't get something, and then the user interface is displaying an inconsistent state. So we know that if we send everything, that, well, everything will be in sync. If we don't send everything, there's potential for omissions that could lead to subtle bugs. So we did the brute force approach. Obviously, that's generating too much data for some reason. We need to look at how to scale back to, if not the minimalist approach, to something that's less overkill.
Thanks for the answers.
That was interesting. I hope that you guys did survive falling into that vortex.
All right, I'll catch you all later. Thank you, everyone, for showing up for another Mumble, and look forward to seeing you next week.
Yes. Thank you, Bytemaster, for showing up and being transparent about this. I just want to, before Bytemaster leaves, I just want to say this, and take the opportunity to say it to you, because in this ecosystem, there are a lot of people and a lot of projects, and most of the crypto community does not know anything about them. However, I can say that the individuals who join here to participate in these discussions, and Bytemaster himself has gone out of his way many times to make sure that this is transparent for all of us. And so the fact that he comes on here all the time lets people know that this project is still alive, and the fact that you guys are here lets them know that it's still alive. During the hard times, this is so much more important. So I just really appreciate all of you guys while we're going through growth pains, hard times, bear markets, the ups and downs, for just sticking through it. And Bytemaster, thank you for always being here to participate as well, because it's nice to have project leaders who really reach out to the community and are as transparent as you are. I'm seeing stuff behind the scenes with play and music that I feel the community feels like they're not being given much information, and you've never done that. So you've taken a lot of hard times for us sometimes, but and it's not always easy, but it deserves respect, man.
Thank you,
Thank you, guys.